Hey everybody, this is Greg Gossett, and today is July 17th, Sunday, 2022, and hope you're doing well, and thank you so much for coming and visiting the Gossett Trading and Mentoring Weekend Update podcast. Hope you had a good weekend. Hope you had a good trading week last week. It was nice to see the market rally a little bit and give a little bit of a relief. But thanks for coming. Thanks for spending the time. I hope these podcasts have been helpful for you. And today, what we're going to do in this podcast, first of all, we are going to run the U.S. legal disclaimer as usual. Secondly, we're going to come back. We're going to take a look at my current positions. We're going to talk about when I bought them, why I bought them, and how I am going to manage them moving forward, either to the upside or to the downside. I did enter two new swing trades on Friday, one on RIO, R-I-O, on the daily time frame, and I also entered DDM, which is the double leveraged SPY, double leveraged Dow, on the weekly time frames. Probably a good time for me to note, but I do like to trade multiple time frames. I like to look for confluences, combinations of indicators and supports lining up on multiple time frames. And today I will point that out when I go through the positions that I have. All right. After that, we are going to talk a little bit about trader psychology. Always very important part, probably the most important part of trading is getting your mind right. It really, really is. And so I always like to spend a few minutes talk about trader psychology, have something from Mark Minervini that I'm going to share with you. After that, always like to do one poem from my friend Frank, who's a great poet, a great trader, great author, great musician. And he always writes a fun poem every day, and I always like to highlight that. After that, we are going to go over to the symbols that I marked on my watch list. I did go through each stock on my large watch list, and I narrowed it down to, what do we have here? 8 different ones. I think I have 6 of them that are possibilities, so we'll take a look at those. And those are what I'm looking for next week for potential entries. Usually when I go through the watch list, I find something that either has to go down a little further or up a little further before it will trigger an entry for me. So I have marked these, and so we'll go through those. And so hopefully this will be helpful for you. Like I mentioned, I have to run the U.S. legal disclaimer, so I will be back in about 40 seconds. So hang tight. Thank you. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Please carefully read and/or listen to the U.S. government required disclaimer before watching this video or live stream broadcast. The video link and disclaimer text are located in the description section of this video or live broadcast, here and here. Thank you so much. Alrighty, thanks for holding through that with me, and let's go to first position on deck. This is Pfizer, PFE. Just a moment ago, I talked about the confluences, the combination of indicators that I like to see before I enter a trade. I did buy Pfizer back here on the 17th of June, so I've been in this trade exactly a month, and you can see I bought down here 46.53. There's the 300-day moving average. That's it's a pretty significant level of support, kind of the last level of support that I look at. And on the particular day that I bought it, it did go under the 300 and over the 300. So that's one indicator, that's one trigger. But I also had multiple. I had another one. I had an intraday rejection of the 30 RSI, where we went under 30 at one point during the day, and then we closed back above. So there you go. There's the two. Under 30, over 30 intraday, under 300, over 300 intraday. Now, as soon as I see that I'm going to be buying something, right, that I see the trigger of what I want, my end of day stop is going to be, why did I get in? Well, I got in because it rejected the 300. I got in because it rejected the 30 RSI. So my end of day stop would be any close on this one, because there's two of them. I have to decide, is it going to be an under 30 that's going to stop me out in the day, or is the close under the 300 going to be the end of day stop? And I decided either one of them is fine, but I decided I would go with the 300. I always think the moving averages, like the 200, the 250, and the 300 are a little stronger than the 30 RSI. Sometimes they are, sometimes they're not, but in this case, I decided that's what I was going to do. So any close below the 300, I would be out. Now, we've had a huge rally, right? It's been a great trade. Did I know it was going to do that? No, I certainly did not. I based my trade upon the bounce at the support, but the key here is buying, if you're long, very close to where your end of day stop is. Well, you can see here's the 300-day moving average. If I would have closed below that even a penny, I would have just gotten out for a small loss. And that's the key to profitable trading, everyone. Identify support levels, place your entry, position size based upon volatility, which we'll get into a little bit later, and have a good risk to reward ratio. And pull the slot handle, and whatever happens. And you can see this worked beautifully, right? Bought here about 46.53, moved up. Now, orange line here. Oh, I think I erased that orange line. Sorry, but I do place a 1.5 ATR trailing stop level above my entry. Once I get there, I go into what's called trailing stop mode. And that happened right about here, the second day. Sorry, I must have accidentally erased that. But you can see it moved up. It got into my trailing stop level 1.5 ATRs above my entry. Then I go into trailing stop mode, which means once I reach that 1.5 ATR trailing stop level, if I get a close below any previous day's low, I get out of half. Well, that happened here, right? On this particular bar on the 28th, it closed below the previous day's low. I don't want to get out of everything. I got out of half here at about 50.65. Just kind of roughly do this here. And so I got out of half with approximately 8.06% gain. It's pretty good, but I kept on to the other half. Now, you can see as soon as I sold it, it moved up higher. And I do have a rule when we get up to a 65 RSI, if I have a close below the 5 EMA, that's when I'm going to exit the entire trade. Well, this got kind of close, but it only got to about 60, did not get to 65. So here we closed below the 5 EMA, but that doesn't get me out because for my rules, it did not get me to the 65 RSI level yet. So I'm just holding on to it, have a lot of breathing room in this stock because it moved up so strongly. So we'll see what happens. You know, am I going to ride it all the way back down to 46.53? Well, I've been taking profits on the way up, which I always do. I take partial profits whenever the market gives them to me. Of course, I got out of half here. So my position size is pretty well reduced because of all the profit targets that have happened and from getting out of half here. So yes, I am risking open profit to make more profit, but my line in the sand at this point will be just what it was when I first entered. If it closes below the 300 RSI, 300 SMA, I will go ahead and get out. If it continues up higher to the 65 RSI level, then of course I go into what I just mentioned. Close below the 5 EMA, I will get out of everything. If it keeps moving up, rejects the 70 RSI, then I will get out of half of whatever I have remaining. And then if I have a close below the previous day's low, I will get out of the second half. And so, you know, in this podcast, I try to go over the basics. I try to teach you, right? But I do have some time constraints here. There's a lot of rules and so forth. So I just want to mention here that if you are interested in taking one-on-one lessons with me, I do offer them in the evening time via Skype. I teach you all 5 of the different trading approaches that I use step by step. And so when you listen to this podcast, you may go, I'm not sure about that, Sorry, I do the best I can. But, you know, as far as really learning it, you kind of have to really learn it. And that's why I offer the lesson. So I'll talk a little bit about this after hours, but really all you have to do is email me. The email is in the link of this YouTube video. And if you're interested, just send me an email and we'll set up a call and talk about things. All right. So anyway, Pfizer currently, with the shares I have remaining, entry to current price, right about 9.92%. So pretty good trade on Pfizer. All right, Rio. Rio is another position that I entered just on Friday. And I entered Rio here with an intraday under 30 over 30. during the day, you can see the current RSI is 3156. It was much lower during the day and recovered. Also created a V1 here in addition to the intraday under 30 over 30. So I did go long. 55.33 was the entry price. Now, when I do enter a position here, I always have to think about my stops first, and I have two types of stops. I have what's called an emergency stop, and then I have what's called an end of day stop. Well, let's handle the emergency stop first. So I always need to know what my maximum allowed loss is on any one trade. And a good rule of thumb is 1% of your total trading capital. So let's just say in this situation, you had $50,000 trading capital. 1% of that is what? $500, right? So I would take $500, I would divide it by the value of the 2 ATR, which is $4.44. Of course, this number changes all the time. This is just this particular example. But that basically means that my emergency stop is going to be 2 ATRs or 2 standard deviations away from where I at. I don't want to place my emergency stop too close, because if it's within 1 ATR, it probably will get hit, because an average true range means it's the average. It moves that much on average. So I want to place it outside of noise. So $50,000 trading account, 1%, 500. Of course, if you had a $100,000 trading account, maximum loss for your emergency stop would be $1,000. If you had 25,000, 1% would be 250. So let's just go in this particular example with $50,000, 1% of that, $500, divided by the value of the 2 ATRs the day that you bought it. And so in this particular case, you take $500 divided by 4.44, 112.6 shares. I'd round that up to 113 shares. If 113 shares moves $4.44, how much do you lose? You lose $500, right? And it's nice. This really helps you adjust your position size based upon what's going on. If the volatility were much higher, then I'd buy fewer shares. If it were lower, I'd buy more shares. So I'm an end of day trader for my swing trades. I make the decisions at the end of the day unless my emergency stop is hit. And it's quite far down here, right, at $50.89. If it moves down and I was trading a $50,000 account, 1%, 500, then I would lose the $500. That's not going to happen very often. It's going to happen about 5% of the time. 95% of the time, the stop that you have is just going to be your end of day stop. Well, my end of day stop was, why did I take it in the first place? Under 30, over 30. So tomorrow, if it closes at $29.99, I just get out. That's it. I just get out. If it were to open here at or below my maximum allowed loss, I'd immediately hit the sell button. That's all there is to it. Now, orange line up here is my 1.5 ATR trailing stop level. I take my entry price plus the value of the 1.5. So I take my entry price, add on this example $3.33 above. My trailing stop level is at $59 even. So if it gets up here to my trailing stop level, then I go into trailing stop mode. Doesn't mean I sell right away. It's just, it means I'm in the mode. And once I go in the mode, then if I have a close below the previous day's low, I will get out of half my position. And in addition to that, I always take partial profits on the way up if we move the value of 0.45 from the previous day's close. Well, right now, the previous day's close, 55.41. The value of the 0.45 is $1. So I basically take 55.41, add the dollar, 56.41. I take 56.41, add the dollar again, 57.41. Take 57.41, add the dollar again. I get 58.41. Those are my 3 profit targets for tomorrow. After tomorrow's done, I have to recalculate them. But I take those 3 profit targets, just taking the closing price, adding the value of the 0.45 ATR. That gives me my profit targets, and I take 10% of whatever I have. So in this particular case, what, 113? So, you know, I would take off, 11.3, so I'd round it down to 11. So I would sell 11 shares at the first profit target, 11 shares at the second profit target, 11 shares at the third profit target. I always like to play offense, defense. The defense are the emergency stops. The defense are the end of day stops. The going into trailing stop level is also defensive, but offensive. And right, all great sports teams have to play offense and defense. The offensive part is selling into strength. Not all, but a portion. So that's the setup on Rio Tinto. The other thing that I liked on Rio Tinto, I like to look at multiple time frames. I like to look at the larger time frame. So if I'm trading the daily, I want to look at the weekly. We'll look at the weekly. The weekly rejected the negative third ATR channel and also rejected the 200-week moving average. So I have support not only on the higher time frame, which is the weekly, with the negative third ATR channel, which 92% of prices tend to hold, not all, but 92, and the rejection of the 200-day moving average, and so that's the bigger picture. And then on the daily, where I entered the trade, had the V1 bullish engulfing bar as well, and the under 30 over 30. All right, let's head over to some weekly trades. First on deck, I did get out of Alibaba on Friday. I did buy Alibaba back here on 527, higher low V1. Here is bar 1, bar 2. Bar 2 washes out bar 1's low, closes above bar 1's close. Buy here at 93.03. Of course, down here is my emergency stop that we talked about in the previous trade. End of the day stop on a V1 or V2 is a close below halfway the washout bar. This is the washout bar. This orange line's halfway. You can see the next week it went up, reversed, but did not close below there, so I continued to hold it. Orange line up here is the 1.5 ATR trailing stop level from entry, and it moved right 2 weeks later. It moved right up to there, which what does that mean? It means I go into trailing stop mode. But in this particular case, we rejected the 50 RSI, which is a signal for me to get out of half of my position. So let's see, from here to here, that first amount was about 14.83% that we locked in, half. And then it kept moving up. Now I'm in trailing stop mode because it got to the 1.5 ATR trailing stop level, continued to move up, took partial profits using the 0.45 ATR, took one here, not one here, took one there. And then last week, what happened? We had a close below the previous day's low. I decided to exit the entire trade. The second half of the position was a gain of 9.14%. So pretty good, and I'm out of Alibaba. All right, I did also take a weekly trade on Friday on DDM. DDM is double leveraged Dow Jones Industrial, the index. Why did I buy it? Well, a couple reasons. Nice, you can see the 200-day moving average on 1, 2, 3, 4 weeks ago. We closed below it, then we closed above it. The next week, we came down again, bounced there, held it as support. The next week, bounced there, closed above it, again, retested the 200-week moving average and closed above it. That was my entry point. Purple line down here, emergency stop, right? I take my maximum allowed loss divided by the value of the 2 ATR, 1086. That tells me how far to put my emergency loss below my end of week stop. What's it going to be? It's going to be a close below the 200-day moving average. Just that simple. And then orange line up here, what's that? 1.5 ATR trailing stop level above my entry. If I get up to there, then I will go into trailing stop mode. But let's look over on the monthly. And the reason I took this trade ultimately was I like the weekly trade, but I also like on the higher time frame how, do you see how we've rejected the 50 SMA last month, and again we bounced at it this month? So that's why I took the trade. So new trades, Rio on the daily, under 30, over 30, end of day stop, close below the 30 RSI. New trade DDM on the weekly, rejection of the 200-week moving average, end of day stop or end of week stop, close below the 200-day moving average. All right. So before we start taking a look at potential trades for next week, do want to do a little trader psychology. This is, of course, from Mark Minervini, quotes at Minervini quote. Of course, you know Mark Minervini, very famous trader, market wizard. Whenever I see something from Mark Minervini, usually psychology related. So let's take a look and see what he says. But please follow Mark Minervini quotes at Minervini quote. It's worth your while and it's free on Twitter. To have lasting success in the stock market, you must decide once and for all that it's more important to make money than to be right. Your ego must take a backseat. And boy, do I really relate with this one. You know, I've been trading for almost 27 years now, and I have a lot of experience. And there's times where I think something's too high or too low, not based upon technicals, just based upon experience. And usually that's what burns me. And it's kind of my ego, right? It's kind of my ego. I mean, sometimes it works out, sometimes it doesn't, but Mark is 100% right. Just follow your signals, have a good risk to reward ratio, position size for volatility, have your emergency stop, end of day stop, keep your losses small, let your winners run, and you know, have a protocol and a methodology to do that. And when I read this, it really kind of hit me, and so that's why I did want to share it. But to have lasting success in the stock market, you must decide once and for all that it's more important to make money than to be right. Your ego must take a back seat, and it's really so true. So thank you, Mark Minervini, for that. Was helpful for me. Hope it was helpful for you as well. All right, let's check in with Frank. You can follow Frank at FrancoD over on Twitter. Today's market poem: pay attention to that inner thought. It's the part of you that has learned from every stock you've bought. There's much in the market to leave a trader overwrought. That quiet voice can make the difference to the profits you've sought. Isn't that good? Pay attention to that inner thought. It's the part of you that has learned from every stock you've bought. There's much in the market to leave a trader overwrought. That quiet voice can make the difference to the profits you've sought. So really like that poem, Frank. Really appreciate it. You can visit and follow Frank at FrancoD over on Twitter. He writes one almost every single day. What's going on here? No. Oh, yeah, that works. Sorry. Okay, here we go. Back in business. All right, so I have flagged some of the symbols that I'm looking at for next week. Let's go down, check them out on the daily time frame. Okay, here we go. Here is AGQ. AGQ is double leverage silver. Now, I've been mentioning silver AGQ for the last few podcasts. We just haven't been able to get over that 30 RSI level. We're at 28.48. Metals have been very weak, but we are oversold at a 28 RSI level. I would be looking to enter AGQ if we have a close above the 30 RSI. Let's look over on the weekly. Weekly, not so great as far as ATR channels go, but look at the RSI on the weekly as well, 29.52. So if we have a nice bounce up here on silver, it will put us over the 30 RSI on the daily, and it will also give us a under 30, over 30 on the weekly, which is significant. So that's what I'm looking for on the daily, looking for an under 30, over 30 next week. GDX, well, GDX Gold Miners ETF, this would have been a legitimate entry on Friday. I didn't want to take too many trades. Of course, I took the Rio trade and the DDM trade, but look at this. It's 30.48, so it did go under 30, over 30, which is great. So next week, what I'd be looking for on GDX would be another under 30, over 30, and it did bounce at the negative 30 ATR channel. So this would have been a legitimate entry on Friday, but I didn't want to take too many trades on Friday. So this coming week, if GDX, the Gold Miners ETF, test an under 30, over 30, whether it's a close under 30, back over 30, or another intraday over 30, that's what I will add. Gold, GLD, of course, we're at 2373. You can see the market, the GDX was a little stronger than gold from an RSI perspective, but if we could jump over the 30 RSI on gold, depending what day it is, depending if I've already taken GDX, if I take GDX tomorrow, Monday, and then gold triggers, I'm not going to buy gold as well because they're too highly correlated. So, this list is kind of a work in progress depending. It doesn't mean if everything triggers, I'm going to take it. So I just want to make sure. But on GLD itself, 2373, let's look over at the weekly. Well, look at this. The weekly getting close to that 200-day moving average. If it continues to move down on the daily, I won't take it. But if we get an intra-week rejection of the 200, then I'll take it as a weekly trade. So that's what I'm looking for, either an under 30, over 30 on the daily, or a close under, close over the 200 on the weekly, or an intraday rejection of the 200 on the weekly. Lockheed Martin. Well, last time, let's see. Oh yeah, it didn't get to the 200. But what I'm looking for on Lockheed Martin, we're getting down to some serious support here at the 200-day moving average. The only fly in the ointment is that we do have earnings on the 19th in 2 days. So I guess what I'd really like to see, if Lockheed Martin has bad earnings and goes under the 200 and then after closes back over, I would take it. But it's so close to earnings, even if we did get an under 200, over 200 tomorrow, I wouldn't buy it because then I would only be in the trade 1 day, which is still fine, but I'm not going to do that. So ultimately, really what I'm looking for, I'll have to wait on LMT to have earnings, get the earnings out of the way, and then see if I could get an under 200, over 200. Philip Morris, interesting stock here. You can see on the weekly we've had we bounced right at the 100-day moving average, like just literally pegged it 100-day moving average. So on the daily, we're at 29.52. So it's very close to potentially getting back over that 30 RSI and getting back over the negative third ATR channel. It does have earnings on the 21st, so has a little bit more time. So if this were to go under 30, over 30 tomorrow, I would buy it because then I have a few days to hold on to it. But at the very least, I need an under 30, over 30, and I will not hold that swing trade through earnings. Qs. Well, Qs did have a legitimate entry signal on Friday. It had a 520 crossover, which is crazy because we haven't had anything even remotely close to a crossover in this bear market, but we did. We really did. And I didn't take it because I took the Rio, I took the DDM, but what I would, and two, I don't like the fact that we have this downward sloping 50 SMA right above us. You can see 1, 2, 3, 4, 5, 6 days ago, we literally touched it and moved all the way back down. Will that happen again? I don't know, but it's possible. So really what I'd like to see here on QQQ for next week would be a move down with the 5 crossing under the 20 and then back over. SPY. Nothing here on SPY, just wanted to highlight it because it is a major market index. You see we had the big down bar here. Usually when you get to about halfway of that of a big down bar like that, you're going to find some resistance like you did here. It went a little higher but then came back down. We are right back in that halfway point. We're right up against the 1 ATR channel. So there's a lot of kind of potentials here for SPY that I would be looking for the market to go down. Of course, I don't know that. One of the better crossovers on SPY is the 1050, the 10 EMA, 50 EMA crossover. We're not really even close to that. So the SPY is in a place here where things could go either way. But if I look to the left here and I see this big bar, I see that looks like we're going to run into the 1 ATR channel and the halfway mark, which is a little concerning for me. XLE would have been a legitimate entry on Friday. Pretty good, but again, I took Rio, I took DDM, but you see how we had to close under the 200 and over the 200, good risk to reward ratio. Of course, if I bought this, which I could have, it was legitimate, I would have just taken my maximum allowed loss divided the value of the 2 ATR, 652. I'd have placed my emergency stop. Where's my end of day stop? Or in other words, why did I take the trade? Well, it rejected the 200. So if it closes under the 200, I would get out. So what am I looking for XLE for next week? I'm just looking for another close under, close over the 200, or intraday rejection of the 200. And then lastly, XLV. This is a short. This is something I'm looking for a short. I'm looking here on the weekly, and I see a lot of resistance here. I see the 50 SMA, I see the 20 EMA on the weekly, and then on the daily, what I'm looking for is a rejection of the 200. You can see the last time we just bounced at the 200, or we came up underneath it, touched it, and moved right back down. It had a significant move down. So obviously wish I would have taken that, but I didn't. So based upon the weekly, with all this resistance being up here, and then looking at the daily, if it were to go above the 200 and then close back below, that would be my exit. That would be my entry for the short. After the short, if it closed back above the 200, I would just go ahead and get out. That's the key, the risk to reward. All right, so I have been looking at a few more shorts lately on this podcast, so hope that's helpful, but I'm not going to do anything unless we reject the 200-day, close back under, then I'll take my trade. All right, so hey, as I mentioned at the top of the podcast, I do teach private one-on-one lessons in the evening time via Skype. I teach all 5 of the different trading approaches that I use. I teach you all step by step. I've taught so many people, so many students from around the world, and turn them into some pretty dang good traders, and I think I can do the same for you. If you're interested, just send me an email. My email is in the link of this YouTube video. And if you do write, just say, hey, Greg, potentially interested in your course. I'll write back and say, thank you very much. Appreciate it. Let's set up a Skype call. The Skype call is not a sales call. I promise you. I just want to learn more about you and your trading, your challenges, your goals. It's a good time for you to ask me any questions about the course. And when we're done with the Skype call, you think I won't contact you. You think about it as long as you want. And if one day you decide, hey, today's the day I want to take these lessons with Greg, just email me and we'll get it set up. It's 15 hours of one-on-one instruction. And I really do believe, honestly, that the best way to learn anything is one-on-one with your instructor. Better than in a group. I just think it's better. And the price of the course is $1,750, but I promise you it's worth every penny with what you're going to learn. We go through all the details. We do all sorts of simulation trades because I really need to know before I let you go that you understand all the rules of everything. And there's a lot of rules, right? So if you're interested, please send me an email and we can get that started. Alternatively, if you like online courses, I have a great one. It's called the Deep Dip by Stock Trading Strategy. It's available at udemy.com. The link to that course is in the description as well at udemy.com. And it's a great course. I teach you step by step how to trade the Deep Dip by Stock Trading Strategy. And a lot of the ones that I've taken here that I've just highlighted are deep dip buy strategies. And the best thing, that course only costs between $12 and $15 on udemy.com. It's really worth it. You get 26 videos, you get 15 study guides. You get so much content, 9.5 hours of video. For that price, it's a steal. So the link's in the description of this YouTube video. And then lastly, if you like today's podcast or liked any of the previous podcasts, I would really appreciate it if you could hit the thumbs up button. Helps to keep the channel around, helps YouTube know that there's some valuable content so they can get out and share it more. So tomorrow's the new day of the trading week. I hope we all have a good trading week. I hope we follow the rules. I hope you've had a good weekend. Please try to keep in mind to try to do something nice for someone every day. Just one nice act of kindness really would make the world a better place. If you have it in your heart to go out and do something nice for an animal as well, that would make it twice as good. I was raised with a lot of animals. I know they appreciate acts of kindness just like humans do. And maybe one day someone will be there for you with an act of kindness as well. And so have a good evening. Have a good rest of your weekend. Have a good trading week next week. And we'll see what happens. We'll see what happens. But thanks again for tuning in. And then on the way out here, I have to run the U.S. legal disclaimer. Thanks again, everyone. Take care of yourself. Bye. U.S. government required disclaimer. Stock, options, futures, and Forex trading is not appropriate for everyone. While there is a potential for large rewards, there is also a substantial risk of loss associated with trading. The material in this video or live broadcast is not geared towards any particular individual or to any particular financial situation and is not intended to meet the particular investment objectives of any viewer. This video or live broadcast, like all instructional materials produced by Gossett Trading and Mentoring LLC, is created and published for informational and educational purposes only. Any and all information contained in, implied, or referenced by this video or live broadcast is not to be construed as investment advice, and no representation is made that any individual or entity involved in production of this video or live broadcast is an investment or financial advisor or is registered or authorized to give any financial advice. We are publishers and educators only. Therefore, the various producers of this video or live broadcast will not accept liability for any loss or damage of any kind which may arise either directly or indirectly out of the use of any of this material, including any loss of profit. No representation is made that any account or investment will or is likely to achieve the profit or losses demonstrated. We recommend consultation with a licensed and qualified professional before making any investment decision. This video or live broadcast is not to be construed as an offer to buy or sell any security, financial instrument, or financial product of any kind. Notice is hereby given that any individual or entity involved in production of this video or live broadcast or their clients may have an interest in any security, financial instrument, or financial product mentioned or referenced. Any simulated or hypothetical performance result depicted does not represent actual trading and therefore may under or overcompensate for the impact of various market factors such as lack of liquidity. Thank you.